face, no case, no trace, no waste in the crypto game. He's the ace in the race. No face, no case, no need to replace the king of the chain, staying in his own space.
What is going on, guys? Welcome back to the No Face Crypto channel. Where's no face, no guys? You feel me? Today I'm going to be talking about the traditional Japanese carry trade and the reverse carry trade. I believe what we may be seeing right now in the crypto markets could be the pair of, well, one, pure manipulation on the United States side, and then a continuation of the reverse carry trade carrying out over Japan. Now, it can be a little difficult to understand this, so I literally found the best video to be able to explain this. This guy has the mathematics, he does everything very well, so I'm straight up biting this content. I'm not gonna lie. It's 10 minutes long. You guys need to watch this though, and this will exemplify exactly kind of what's going on, and when the reverse carry trade takes place in full and all this money starts flowing back into the yen, the infrastructure and the clarity is already there for crypto to take over in Japan. And I am telling you right now, the most bought cryptocurrency in Japan is XRP by a long shot. So we could see some volatility. Doesn't really matter. All that matters is long term. What's going to happen here is long term adoption for XRP. It's written in stone already, guys. It's going to happen. All right. It's not even really about when. You shouldn't be worried about when. You should just be learning and knowing that it will be happening at some point. All right, let's go ahead and watch this video. You feel me?
People borrowed in yen to buy Japanese stocks, among many other assets that are now unwinding.
Unwinding.
In this video, I'm going to break down exactly how the yen carry trade is supposed to work using an easy to follow example, and then explain exactly how it can stop working so suddenly. My name is Preet. I used to be a stockbroker, and I'm currently a consultant to the wealth management industry focusing on commercial applications of behavioral finance. And this channel is for people who want to learn more about money and investing without being told to buy meme coins, or that the market is just flipped like every month, or that the Great Reset is finally here, or whatever other BS is making the rounds with the grifters. At its most basic level, a carry trade is typically associated with finding a country where interest rates are super low, so you borrow money there where it's cheap, and then you take the proceeds of that loan and invest in a country where interest rates are higher. The difference in interest rates is referred to as the carry. Now, this is not a precise definition of carry trades, but let's park that for now, explain the typical currency carry trade, and then circle back once we have a conceptual model that's easy to understand. A yen carry trade is simply when you execute a carry trade and the funding currency is the yen. The funding currency is just the fancy way of saying the currency in which you borrowed money or are short to begin with. So let's say that interest rates in Japan are super low, like 0.25%. And let's also say that interest rates in the United States in a savings account are 4%. If we borrowed the equivalent of $1 million US in Japan and took that money and put it in the US savings account, we'd be paying 0.25% in interest in Japan, which on $1 million equals $2,500. But we would be earning 4% interest on that $1 million in the US, or $40,000. We'd be making $37,500 every year. That's a return of 3.75%, and it sounds pretty good. Now, of course, we haven't factored currency conversion or other costs, but you get the picture. It is this interest rate differential that is the carry, at least in this case. Okay, so with this very simplistic overview of how it works in principle, let's now look at a bit of history to the carry trade concept in practice to go a little bit deeper. About 30 years ago in Japan, in response to deflation and a long period of stagnation for their economy, Japan's central bank engaged in what is now commonly known as ZIRP, which stands for Zero Interest Rate Policy. This was in the mid-90s, and interest rates in Japan were basically low for a very, very long time. And at the same time, interest rates in the US were closer to 6%. But this is very important. A key part of the now famous yen carry trade was the overwhelming thinking that Japan should also take steps to try to weaken the yen for, amongst other reasons, make their exports more attractive because it would make it cheaper for people in other countries to buy their stuff. So when you take this all together, super low interest rates plus an effort to specifically devalue the yen, that made the yen carry trade especially attractive. Because if you borrowed money in Japan in yen to initiate your carry trade, and then when you had to pay it back after the yen had also lost value, you effectively have to pay back less money, and your trade looks even more profitable. So let's now go back to our simple example, and this time we will introduce the exchange rate component. If we want to borrow the equivalent of 1 million US dollars from a lender in Japan, we borrow in yen. Let's say that when we initiate the trade, the US dollar could buy 100 yen. That means we would borrow 100 million yen at 0.25%. Our interest payment for 1 year would be 250,000 yen. For now, we're going to continue to ignore currency conversion costs. We take our 100 million yen and convert it to 1 million US dollars and put that into a savings account that pays 4% interest. So we get our $40,000 of interest earned over the year. Now, let's say that the yen has depreciated, it's devalued from 100 yen per US dollar to 110 yen per dollar. Remember, if the yen is losing value, it will take more yen to buy 1 US dollar. Let's also just assume that we unwind our trade after 1 year and that any interest owed is only payable at the end of that year, just to make things easier to follow. Our 1 million US dollars has grown with the interest earned of $40,000 to $1,040,000. We need some of that to pay off our loan in Japan, which was 100 million yen plus the interest of 250,000 yen for a total amount owing of 100,250,000 yen. At the new exchange rate of 110 yen per US dollar, we take 100,250,000 yen and divide that by 110 to get $911,363.64. So if we take what we have and we subtract what we owe, we get 128,000 and change, and that's a gain of 12.9%, which looks pretty damn impressive. So remember, it's these two ingredients together, the carry of the interest rate differential, plus the move in the exchange rate based on a policy of trying to devalue the yen, that made the yen carry trade so profitable for so long that it became very famous. However, as you can see, the return on this trade was juiced because the yen devalued. And you can probably surmise that an increase in value of the yen would work the other way and create a drag on returns. So let's look at what happens when the funding currency appreciates in our example. Let's go back and assume that the yen appreciates from 100 yen per dollar to 90 yen per dollar. Remember, it's gone up in value, so it now takes less yen to buy 1 US dollar. Now at the end of the year, we still owe 100,250,000 yen, but when we divide that by 90, we get just over 1.1 million that we now have to convert to cover that. There's just one problem. We only have $1,040,000. So we're short, in this case, just under $74,000. Now, at the beginning of this video, I said I would expand on the different forms of carry that exist. It's not just about an interest rate differential between a funding currency interest rate environment and putting that into a higher yielding environment in another country. The funding currency can be used to buy anything, including bonds, stocks, commodities, and so on. And that's what people do in practice. Now, you can ignore the next 20 seconds if you want and use the opportunity to hit the like button. But more technically, more recent theory suggests that an asset's carry is the expected return, assuming its price remains the same. And I know what you're thinking. If the price doesn't change, how do you get a return? Well, for equities, the carry is related to the dividend yield. Bond carry is related to the slope of the yield curve, and for commodities, the convenience yield is the carry. Okay, you can stop ignoring me for now, but all of that basically means that you can find carry in places other than currency pairs or interest rate differentials between countries. Like, for example, stocks. Now, of course, in the real world, we do have to look at the non-carry portion of returns, which are quite unpredictable.
Can I show you an insanely good risk-reward trade? You see, it's actually joining the vault right here, which is my free.
So, what would happen if we borrowed 100 million yen, converted it to 1 million US dollars, and used that to buy stocks? And then those stocks went down 10%, and the yen also increased in value. Does that remind you of a scenario that happened recently? So let's go back to our example. Our $1 million is now only worth $900,000 because, again, those stocks that we bought went down 10%. And if we closed out our trade to pay off the 100,250,000 yen we owe, and still assuming that the yen appreciated to 90 yen to the dollar, we are now short $213,000 and change, a loss of over 20% on our original $1 million initial position. And that is quite significant. And in the real world, what do you do when you see all this starting to happen, or you're worried that this is all starting to happen quickly? You don't wait to unwind. You sell the assets that you bought with the borrowed money pretty quickly. And this actually creates a knock-on effect because that selling creates more downward pressure on those assets. So the declines start to accelerate, which creates a race to the bottom, if you will. All the money flowing back into buying yen to wind down the trades means that there's also more demand for yen, and the yen appreciates more, and it gets very ugly very fast. So anyways, that's a primer on the yen carry trade and how it's supposed to work and how it doesn't work from time to time. We glossed over some practical details, like the fact that many people initiate these types of trades using forwards, futures, swaps, and other methods, but you get the idea in principle of what's trying to be done. Now, in terms of what this means for your portfolio, well, I can tell you what I did: nothing. Being able to understand what the headlines are talking about is one thing. Being able to predict what happens next is totally different and generally futile. If you have a proper long-term portfolio strategy, you shouldn't have to make knee-jerk changes in reaction to short-term news and developments. But hopefully, understanding what has happened will give you a little less uncertainty and maybe reduce any fear or anxiety that might exist, because managing our behaviors is one of the key components of successful long-term investing. Now, if you got this far without hitting the thumbs up, shame on you. What does it take? Moving your finger or thumb like an entire inch? But seriously, let me know in the comments if this explanation helped you understand the carry trade and carry trades in general. And it's always appreciated if you're a new viewer to subscribe to show your support.
All right, guys. Now, this is something that is not talked about too much in the grand scheme of things when it comes to macros and stuff like that, but I will let you know right now. Okay, this has a very high effect on things like XRP, utility coins, and the good stuff in crypto, the stuff that the very smart people over in Japan like to invest in when they are doing a carry trade. So, I believe this is reversing. It's been reversing since 2024. Obviously, you look at Japan, and Japan's going to tell you that the carry trade is back on. I'm not too sure. I think it's still reversing, and this is why we're seeing some of a downtrend. But with that being said, I don't think this matters one bit. XRP could dump to 20 cents. I would not care. I'd be buying more. All right, because we know what is going to happen. The more it goes down, the stronger it's going to go up, guys. So that's all that really matters here. But one other thing, just to support my narrative here, is a video from, where is this? From CNBC, which I don't really watch too much, but we'll watch it. You know what I'm saying? This is a traditional carry trade, right? XRP adoption is 80% over in Japan, okay? They love XRP. It's not even funny. This information comes from IMF, BOJ, and the SBI. So don't even say, like, come on. All right? Cross-border payments, remittances, and exchange listing is what Japan is going to keep their eyes on when they are reversing a carry trade, guys. They are, legal clarity, and they have all the infrastructure for XRP to take over. All right? They love XRP over there. I'm telling you guys right now. They're going to be investing domestically back into Japan, unwinding the trade continuously, and they are going to be investing pretty much purely in digital assets, blockchain technology. I'm telling you, I'm telling you. But let's go ahead and watch this video, and then I'm going to get out of here.
Learning is there is only one time you can really influence central banks if they're independent, like the Bank of Japan is with the independence law of 1997, is you can influence them when you're changing a governor. And Ueda is a few years away from coming up for vote again, in which case you can mouth the guy, but you can't force him to do anything. And right at the moment, I'm absolutely there with Scott Bessent. It's an odd place for me to find myself, saying, yeah, you're absolutely right, the BOJ is behind the curve.
Hey, Nicholas, it's Lynn here. Great to see you. Just building on that, then, because I was looking at some of your notes, and you're basically saying that Japan is
Shawty, come check out the No Face Crypto channel. What you mean?
On the precipice of some major historic change in terms of a reversal of capital flows, and that has to do with the Bank of Japan, certainly has to do with the Fed, and then, of course, the Japanese currency as well. Can you walk us through your thesis here?
Yeah, I mean, obviously, when I came out of the analyst hatchery, we had policy rates up at 6%. And at that time, Japanese rates were pretty much like anywhere else. And, you know, a lot of the sales children today aren't old enough to remember when Japan was like that. It's been at zero or less than zero pretty much since the mid to late 90s. And so Japan at zero drives money offshore. So since 1996, 2.6 trillion yen has moved offshore. And then you've had the yen carry trade, which is the same thing with leverage. And so people borrow in Japan and spend that money overseas. But the vulnerable point in all of this is the yen. And you remember in just as recently as 2009, it averaged 109 to the dollar. And now it's up at sort of 147, 148. So it could start moving, and of course in 2011 it was in the 70s. If it starts moving, then surely people are looking at their money and saying, I can't get a big enough return on my money overseas to cover the fact that the yen is appreciating. And so think of the feedback loop. The vicious circle here is yen starts to appreciate, people worry about it, they bring some money back home. Bringing money back home makes the yen stronger and pushes all the other people who are sitting on the fence off the fence to decide to bring money back home. So my forecast is that the yen arrives at 135 by March next year. But that's assuming an orderly movement. And obviously we had one movement with the yen carry trade last year, but that was just a practice version. It could be a lot bigger than that. And I would say to people, never mind the yen carry trade, the Japanese money that could be repatriated is potentially much, much bigger. So yes, be afraid.
And this is, of course, Nick, on the assumption here that we will get the Bank of Japan moving in the 3 meetings right before the end of the year. If your call is correct, you know, I mean, perhaps some volatility ahead, 135 for dollar yen. What are the sectors, or what is the 1 or 2 companies that you have your eyes on that will embody this thesis?
Sure. To be clear here,
Alright guys, you pretty much get the point. I'm not going to go ahead and play any more of that video. You don't need to see anything else. And in that video, just keep in mind, we saw a 147 USD JPY chart. At this point, we now are at 150, 142, guys. I'm not gonna lie to you, I'm pretty sure the decrease in this chart means the strengthening of the Japanese yen, as this is a US dollar peg on Japanese yen. So I'm pretty sure that's how this works. And as we can see, I mean, basically by the time of the making of that video, that was back in September, all right? We had a major increase up to about, I don't know, 150 per dollar, all right? Now we are seeing another increase again. I think we are seeing another continuation of the reverse carry trade, just like we saw back in 2024, which would have been right about here. All right. Yep, right here in about 2024. So decrease means reverse carry, and we are looking kind of at a decrease right now, guys. So I'm thinking This is what's going on, reverse carry trade. And they are going to be reinstitutionalizing their money back into XRP and blockchain technology in Japan. And that is huge for crypto in the long run. It's in the short run, but the short run doesn't matter here. If you're invested in XRP, you are effectively a long-term investor. Sorry, that's the truth. All right, I'm going to pretty much get out of here for the day. You feel me? Video's been long enough, and I hope you guys have enjoyed. One last look at the crypto bubbles, guys. We're sitting fine. I'm not even worried about it, and I will catch you guys on the other side in another video later. You feel me?
Masked up tight like the thief in the dark. No face, no case, that's the spark of his art. Charts crashing, burning like the 4th of July. But no face, crypto still flying high. He rides the wave while the rest just drown. Rich list rider wearing the crown. Liquidation storms can't crack his code. He built his empire on the blockchain road. No face, no case, no trace, no waste in the crypto game. He's the ace in the race. No face, no case, no need to replace the king of the chain, staying in his own space. When the market turned red and the bulls went blind, he stayed steady, sharp, mastermind, refined. While wallets froze and traders wept, he flipped the script and his ledger kept. Bag so heavy it bends the rules, swimming through the sharks while they fight for pools. The greatest YouTuber to grace the scene, turning bear markets into a money machine. No face, no case, no trace, no waste in the crypto game. He's the ace in the race. No face, no case, no need to replace the king of the chain, staying in his own space. When the market turned red and the bulls went blind, he stayed steady, sharp, mastermind, refined. While wallets froze and traders wept, he flipped the script and his ledger kept. Bag so heavy it bends the rules, swimming through the sharks while they fight for pools. The greatest YouTuber to grace the scene, turning bear markets into a money machine. No face, no case, no trace, no waste in the crypto game. He's the ace in the race. No face, no case, no need to replace the king of the chain, staying in his own space.